Welcome to the CryptoNest. So today I would just wanted to talk about the average true range. It's another indicator. You just click on indicator, average true range, or you write it down here in the search button. You click on it and this is what you have. So this is, as it says, it's average true range. So it calculates the volatility of the coin or the stock and it make an average. So it means if, let's say, a coin, the daily candle has a variation of 30 cents, it's going to tell you 30 cents. For this example, this is Chainlink, and on the ATR here on the right side, you can see that, okay, now this is 4 hours. Let me go on the daily. So we can see that it's 35.8, so that's 36 cents to round it up. So now, if you want to put a sell stop limit on Chainlink because you did your analysis and you find that maybe, actually, we're not sure, right? Maybe this was the third wave and this should be the fourth wave. And only if we break this previous higher high, local one at $8.28, which was the higher wave that reached the third wave, allegedly, then only then this start to be a fifth wave. Otherwise, we only have a 3-wave down, and possibly this is not a 3, but indeed it's a C, and all this movement it's a 1, and this was the 2, and now we're going to do a sharp impulsive movement to the downside. So how can we use the ATR to help us? So once again, we integrate that with our price analysis. So now, if this indeed is the third wave, this impulsive movement, the fourth wave shouldn't go below 0.5, which is $7. But we don't want to get cut out from a wick out, right? Something like actually from something like today, right? Like a very big candle, and then after, if our sell stop limit, we don't give room to the market, then we got stop out and the market continue the rally. So imagine if we are always textbook, if it goes below 0.5, which is $7, we put a sell stop limit here, and price, it go higher. After it start to reverse, it go lower, we reach the 0.5, and then you know what? It goes lower. It just do a wick to the 1-to-1 ratio, which is the $6.87, and after that continue or rally and does the fifth wave. Then we got stopped out because we didn't leave any room to the market. So how can we protect ourselves from that happening? So we can integrate that to the average true range. So we said it's 36 cents. Let me do, 36 cents. Okay, so the way I can do it is like, okay, fine. We need to give some room to the market. The limit should be 0.5, because if we have a sustainable break below the 0.5 at $7 many days, then it start to be unreliable. But if it's just few candles or just few weeks below that, it's okay. Also 1-to-1 ratio, it's $6.87. So I'm going to take the 36 cents and add it to a calculation. So we said the 0.5 fib retracement, it's 7. I take out the average of 36 cents volatility, it give me $6.64. All right, so $6.64. Now I'm going to put a horizontal ray here, 664, and this is just to give you an idea. Actually, I already have a trend here at 666, so well, it's good enough. Anyway, it's way low, way too low, but it gives us a reference. Also, this indicator now, it got compromised because we had the much bigger candle now. So maybe it was 25 cents before. So now I know that 666 should be the room based on this $7. So if we go and reach the $7, I should give a little bit of space to the market. Now, also, now I have the 1-to-1 ratio, so for sure I want to my sell stop limit to have some room to cover the 1-to-1 ratio in case we just have a momentarily wick down, touch the 1-to-1 ratio, and then bounce back. Also, we're having the MA 50, which is now at exactly $6.84. So, you know, it's all that, you know, you can integrate in when you decide where you should put your sell stop limit. I think here also is the MA200. Indeed, it is. So MA200, it's $6.76. So this is also, you know, you need to be aware of these things. Now, for sure, if price it goes to 7, what's the average? Let me see here. What's the percentage of the room that we're giving, you know, because if it's too much, then it's not worth it, right? Well, look at that, it's 3.5%. So, I mean, it's not that bad. And also, you know that if we reach that level, then for sure that's not a wave 4. So, you're expecting price to go lower, and then it does all make sense. So starting from there, maybe you can even play out beginning of the short. Some people, they also do both at the same time, right? So they do a short and a long. So they start a short if it goes below the MA200, then they start to get into the short, and you know they're going to take a long if we start to reach this price at $7. They give some room, so it's on, as you can see, it was only 3.5%. So it's all this that you need to have an idea, and it give you a general view of the direction of the market with several indicators that they can help you tell you, okay, I have this indicator at this level, the other one, no, MA50 at this level, MA200 at that level, Fibonacci retracement 0.5 at this level. So you have a pretty much good idea of where should be the area that the price could go as low, and past that level, then it get all invalidated one after the other one. All right, hopefully it was helpful. And I mean, I don't use it often also, but sometimes when I have trouble to, I have a trouble to really seize the pattern or something like that, I do usually go and check the ATR and add that to the maths to see, am I doing something wrong? Am I forgetting something, you know? So this is another extra indicator that you can use in case of need. Alright, so hopefully you enjoyed the video. Please like, subscribe, and hit the notification bell, and have a good day.